So today we are going to discuss about one of the most famous analysis or the strategy which most of the investors and traders all over the world use while selecting a particular stock and or while investing or trading in the stock markets. So there are two terms which every knife trader when enters the market heard the two terms, fundamental and the technical analysis. So very long-term traders who trade for around 3 years, 5 years, or have the long time horizon generally consider the fundamental analysis as a very good indicator. So to analyze the stocks and to heard about to choose which stock they'll prefer over the other for the buying by seeing the fundamental aspects of the company, which we'll discuss later in the video. So what is the main point? So if you are investing, if you are trading, you should be aware of in which stock you are investing. You should be aware of the analysis. You should be aware of the annual reports, the net profits, or the if the company is earning profits, if the company is in losses, if the company has a good revenue stream, how many revenue streams does the company have, or how will the business of the company will be affected, which will definitely affect the stock price or the market value of that stock, which will affect your holdings in the company. So you should be aware of that. And every investor, whether he's trading for 1 year, 2 year, whether he's investing with 100 rupees, he's investing with 1,000 rupees, everyone should be aware of the fundamental analysis. So let's deep dive what fundamental analysis is. So in the basic terms, if I go with the pointers, the fundamental analysis is reading the financial statements of the company, reading the annual reports, reading the profit and loss statement, reading the cash flow statements, which are the cash flow streams of the company they are earning through operating or the financing activities, what are the past performance of the company, what is the current valuation of the company using the models, what is the future expected performance of the company using the various models, like we can use the DCF for the current valuation of the stock by the future expected performance of the company or future cash flows of the company. We can analyze the management skill set, we can analyze the whole economy, and we can analyze any major news that comes out. For example, suppose you wake up next morning and you see a particular news about some sector or some company, and you wonder why the particular stock has fallen. So you must be aware of every bit of the news, every small news that the company stock, that so that the company stock price can be affected. So what is the benefits of the fundamental analysis? Like, why do investors consider the fundamental analysis a very good measure? So there are two, three basic reasons. So fundamental analysis assumes that the stock price moves basis the financial performance of the company. Now, for example, consider that any particular stock, may for example take the Reliance stock. So Reliance this year has the earnings or their profits have rose by around 30% or 40%, which is a very huge amount for the conglomerate like a Reliance. So if their profits have bumped to 30 to 40%, the investors will definitely invest in that company, as they will consider that the future of the company is very good. So the stock price will move up very early. So for that reason, the fundamental analysis is some important thing. Now for example, consider that a company is showing the annual reports and you are reading the annual reports, and you got into stuck into some point like the cash flow. They introduced a new cash flow stream and you are not aware of the cash flow stream, and the company hasn't used earlier the cash flow stream. So you should be inquisitive enough to check for, like, from where does that cash flow stream came, or it is a real, or they are just manipulating the annual reports. So you should be aware of the small bits, and this is very useful for analyzing the stock, for basically valuing the stock and making the decision of buying or selling. So this analysis need to be done not just for the company like we are analyzing, but also for its competitor also. Now for example, consider that there are two companies of the same sector and you are in between the midst of, like, in which company you will be investing. So you can consider both the companies, you can analyze the first company, you can analyze its competitors also, like if that company is performing better than its competitors, it is performing as same as the competitors, or it is performing better, it is performing, if it is performing above average than its competitors, then definitely it is a good stock. Then it will have the then it will have the first mover advantage, it will have the more benefits of that company, like they introduce the new products early than the other company. For example, consider the ITC or some other FMCG company like HUL, and if you can compare them, and example, supposedly ITC has introduced a new product which HUL hasn't any competitor, so ITC price will definitely go up. So these are the pointers that fundamental analysts should think upon and the fundamental analysis is useful for. So like now we also have the limitation of the fundamental analysis. That's why some people also use the technical analysis, or Like the first is the bias and the subjectivity. Now for example, you are analyzing some particular stock. Now for example, there are many people who are very affectionate with the blue chip stocks, for example Reliance, SBI. These are very good companies, these are very high net worth companies, they have a very huge market capitalization of lakhs and lakhs crores. So the people have some mindset, some biasness against these stocks, that these will not fall down, or these companies will eventually earn the profit, these companies will eventually give profits to them. So this is the bias and subjectivity while analyzing the fundamentals of the company. So biggest reason is this only. So, and we all have the biases while doing that, obviously. So second could be the analyst reports. A lot of people rely on the analyst reports also. Like there are many analysts across the world who basically publishes their reports by analyzing, by fundamental analysis of more than 50% of the companies in the NSE also. So analysts rely on the fundamental analysis to create the stock reports. So stock analysts are some of the most educated and the smart people. But do you know what comes free with the quality education? It is the ego and the biases. The first point which I discussed is also related to the second point. Like the analysts are also biased, and they also have some ego attached to their mindset that this is a good stock, or if the particular analyst gives the buy recommendation or the sell recommendation of a particular stock, it will be very useful for that analyst, not for the people who are investing on, or not for the clients who are investing on the basis of that report. So these all are the factors which one should consider while analyzing the financial statements, or while relying on the analyst reports without considering the factors. So everyone, every client, every investor, every trader should be aware of what fundamental analysis is, and he should be inquisitive enough so that he could just be see the annual reports and can understand the fact that if it is a good company, or if it is a good company to buy or not. So that's all for today, and thank you so much.